So, hi, my name is C Karthic. I'm the founder of Buzzworks. We are a contract staffing stroke human resources company based out of India. Thanks for having me on the show, Akshay.
So, Karthik, give me like an elevator pitch on what is Buzzworks.
Yeah, so Buzzworks is a company that's in the business of contract staffing. The simplest way to explain this is that the person who delivers the Amazon package at your door is not really an Amazon employee. He mostly is somebody that we employ, or rather hire, train, and deploy to folks like Amazon. So we have about 20 plus thousand people doing very roles from loaders in a godown to coders in a software company. And that essentially is the business of contract staffing, and that's the business that we are in.
Okay, amazing. What is the value add of a contract staffing company? Why does this business exist? I mean, couldn't it all just be replaced through a payroll software? Or I mean, just help me understand what is the value that you are adding. Why do companies want your service?
So I think three pieces. So like I said, hire, train, and deploy option is the value that we add. So hiring sort of very large numbers of people requires large effort. Although you can posit saying there is a job gap, there are lots of jobs and even more people looking for those jobs, but really somebody needs to do that matchmaking. I think that's the first value that we add. In some cases, people also need to be trained before they become job ready. So in some cases, not in all cases, we also train these folks so that they are employable. And then, of course, deployment, like you said, requires payroll, but it also requires adherence to compliance. So payroll is like Excel. You feed garbage in, it will spit garbage out. Somebody needs to make sure that you're obeying the laws of the land when it comes to employer records, when it comes to ESIPF, when it comes to GST, TDS, and we can go on and on. There is enough regulatory overlaps in India. So really, these are the three sort of problems that we solve. Payroll is one of them, for sure, but it's not the entire equation.
So there is this whole category of new age businesses like Deal, which are supposed to be offering an employer of record service or EOR. Are you similar to them or are you different? What is the difference?
I think what Deal does is that it offers a very quick path for you to set up in a new geography if you're not conversant with the laws of the land. And I think everybody has their place. This is a very large business. Deal is not really a competitor, even though they play in similar markets. You will notice that Deal, for example, has a much larger international footprint, right? So let's say, for example, if you want to set up operations in North America and you want to get started quickly and you're hiring only, let's say, 10, 20 employees, then they are the go-to guys. There's no debating that. But let's say if you want to hire 2,000 people and they're at the bottom of the pyramid, then really Deal, again, you'll have to ask the Deal folks this, but I would guess we are slightly better suited for that job. So employers of record are great to get a business started in a geography where you don't have control or where you couldn't be bothered, mostly with small deployments. I think we operate at the other end of the spectrum. Let's say you have to hire a couple of thousand people and maintain those couple of thousand people on a more or less regular basis is where you would get into somebody or talk to somebody like us.
Okay. So one of the first founders I interviewed on the show was someone called Girish, who runs this company called NetAmbit, which offers something similar of managing teams for businesses. Like, for example, if say Swiggy has a restaurant acquisition team or Paytm has this merchant acquisition team which goes and puts QR codes and signs up merchants. So they manage that with a performance-driven compensation. So it's fixed plus performance-driven compensation based on what targets are achieved, how many merchants are signed up, and so on and so forth. Do you look at that as something to evolve into, or I mean, what's your take on that kind of a business? Because you're essentially in a similar space, right?
Yeah, but I would hasten to add, Akshay, that similar is not same. It has to act like a duck, walk like a duck, and talk like a duck to actually sort of be called a duck. Again, Girish or folks like that are essentially in the managed services space, where, as you rightly pointed out, they also take care of SLAs. They also take care of outcomes, right? So our 100,000 merchants being signed up is probably one of the outcomes that they are held responsible for. Whereas contract staffing is only hire, train, and deploy, right? So productivity is not really our game. Now, if we keep saying similar but not the same, you might wonder, is this a niche business? The short answer is that contract staffing is a 13, $15 billion business in India. So it's not small by any means. And it's growing at a very healthy CAGR. So there's no need, or at least as Buzzworks, we don't feel the need to actually go after new sort of spaces where there are great players. You mentioned Deal, you mentioned Netambe. All great players doing great work. So really, when you have an ocean to boil as is, why would you really run after something that I would say we don't know how to do particularly well? Right. So we're quite happy and quite content in doing what we're doing.
Though, does that improve margins? I mean, from what I understand, contract staffing is like a low margin business, right? Like, I think 5% at the entry level, I'm guessing it would be like a 5-6% margin. Of course, if you're doing more niche and senior roles, then probably it's not the same. So if you move into undertaking responsibility of meeting SLAs, would that improve the margin profile? Is that something you even want to do, or would you just prefer to increase volume and thereby increase profit?
Yeah, the metric that we are tracking inside Buzzworks is profitability. And really, it's a combination of volume as well as portfolio. And like you rightly pointed out, there is stuff to be had at 5%. There's stuff to be had below 5%. There's stuff to be had at 50%. There's stuff to be had above 50%. Right? So the spread is really quite wide. And each business sort of has its own complexion, right? If I were to very quickly dissect the business, what is the reason for a business to exist? Again, coming back to your first question at the top of the show, I think it's a combination of three things. One is desirability. Does the customer actually want something like this? The second question is viability. Are you the right person to provide something like this? And the last sort of question is profitability. Can you make enough money or significantly enough money doing what you're doing, doing what you're good at? And we've discovered this sweet spot. Deal has discovered another sweet spot. And of course, Netambe has discovered another sweet spot. Just in passing, I want to mention that recruitment by itself is a very high margin business, but there's probably not that much scale. You can't build 1,000 crore business around it. So really, this there is no such battle in my mind for market share, for customers. I would probably start thinking about this, or we would think about this seriously when, let's say, you become $1 billion company and the market is only, let's say, 15 billion, and you're saying, even at that stage, you would appreciate that you're barely taking 10% of the market. And if you're a category leader, if I were to put myself in that slot, these questions really need to be asked by a category leader who probably has 24-25% of the market. So really, somebody who's $2.5-3 billion needs to ask these questions. We are orders of magnitude smaller, so we're not sort of asking those questions right now and right here.
What will be your revenue this year? Projected revenue?
About 600 odd crores. 600 odd crores. So like I said, there's a very large gulf between being a $2.5 billion company and being a 600 crore company. So right now, we're just getting our head down. Our first target is to get to 1,000 crores. Then our questions become slightly more nuanced, and so on and so forth. But I can more or less guarantee you in an open forum that we are neither are we going into the managed services business, nor will be going to an employer of record business. Not at least in the foreseeable future.
And what will be your profit on 600 crores?
It should make us in the range of 1.5% roughly, so about 10 crores.
Okay, understood. So help me understand the staffing market, like a 101 on this industry. At 600 crores, where do you rank? Who are the major players? What does this industry look like? I believe it is like a fairly fragmented industry because there's almost no entry barrier, right? Other than having working capital.
Absolutely. So it's a 3-tier business. I like to call it sort of an iceberg business, right? So at the top end of the spectrum, there are folks who are let's say, $1 billion in revenue, slightly more, multinational corporations, publicly listed entities, of which there are two, and we'll come to that, TVs and Quest. But internationally also, there are players who have a presence in India. Some names, again, I'm not an exhaustive list, but some names include Adicos, Manpower, Randstad. You know, you might have seen some of these folks, let's say on the back of Formula One livery. They're really that big. They have the wherewithal to sponsor a Formula One team. I think Randstad does one team, although I forget the name of the team. So this is really a fairly evolved business abroad. It started in India in the early to late 90s when our economy started liberalizing, when people got around to this idea. Late 90s is more a better guess. But essentially, this is about 15-20% of the business, right? So organized and institutionalized. If I were to put both of them in one bucket, they'd probably be 20% of the market. And
this would be like a
SME.
100 crore top line plus kind of companies would come into this.
No, orders of magnitude bigger. So just taking two examples, TeamLease and Quest. TeamLease would be in the 6,000 crore revenue range. And Quest would be probably 10,000 crores plus, although I'll have to sort of double check my numbers. This is just an estimate. Right? It's not an accurate, it's not an accurate number. So just between both these folks, they have about $2 billion of the business. Right? International players are slightly smaller in their spread in India because India is a complex market. It's not easy to sort of play India. These folks clearly have it right. But I'm saying if you bunch all these folks together, they'll be 20%, not more than 25% of the market. And then there are SME players like us who are in the, so by SME, I mean, so in this, everything is a little staggered. So by SME, I would say anybody between, let's say, 500 to 1,000 crores is an SME business, right? Whereas in a regular industry, you'd probably say anybody north of 100 crores is probably not small anymore. But really, even at 1,000 crores in this business, you're really small or medium. Again, I don't want to sound self-deprecating.
Margins are low. That's why.
Margins are low. So top line is a vanity metric. So really margins are low. So that goalpost sort of shifts a little to the right. And really small businesses would be between 10 and 100 crores, right? So 1 crore turnover is no biggie in this business, literally. It's no big deal. Of which there'll probably be 60%. Now you have to remember that when this industry started, this was almost 100% mom and pop shops, right? And then sort of the market has started consolidating, it started formalizing, it started being institutionalized, and so on and so forth in the course of the last 20 years. And like with all markets, you will see that the unorganized sector keeps growing smaller and smaller, and the organized sector keeps growing larger and larger. And that's what we see in this business, sort of more consolidation, more institutionalization, more formalization. In the next 10, 15, 20 years, this will probably shrink to about 30%, and then you'll have a 30-70 ratio.
Okay. What is the reason for consolidation? Is it access to capital? Because this is like a business which needs working capital, right? You fund the payroll for about a month before the client pays you, if I'm not mistaken.
In some cases, yes, but I'll sort of go to the a priori condition. The a priori condition is that you have to have the ability to recruit and maintain sort of that strength, right? So it's fundamentally a delivery-led business. Like I said, there are three parts to it: hire, train, and deploy. Let's ignore train for the minute because it's not necessary that occurs in every mandate and with every customer. But you definitely need to have the ability to hire. Otherwise, how are you going to put people on your payroll if you can't hire them in the first place? So I think that is the first condition, right? And then sort of all the other conditions follow. The second condition actually is to be compliant. And part of the reason for consolidation is that, folks are generally footloose and fancy free, as are all startups. When you start, you're always mildly illegal, not because there is some intent to be illegal, but either the law has not caught up with you, as in the law is still trying to figure out how to treat this business industry domain, or in some cases, genuinely you don't know how the law works, right? So, although that's no excuse for sort of flouting the law, So typically GST, typically new labor code, ESIPF, just a massive push towards digitization, centralization, cross connection between your TDS, GST, has what I call sort of had made that regulatory profit. You used to have the ability to make regulatory profit. That has shrunk to zero. So folks who are a little footloose.
What do you mean by
Are gone under this.
regulatory profit? Uh, like when a
Again,
trader is selling something in cash and not paying the GST, so something
absolutely,
like that.
absolutely.
Okay.
So he's making regulatory profit, right?
Okay.
So when these were separate silos, let's say for example, GST was a separate silo, ESIPF was a separate silo. If you remember, TDS was a separate silo. These things were not interconnected and they were not digitized. There were opportunities to do this kind of things, right? But both sides of the market, demand and supply, have now coalesced around the fact that you can't run this business like this. So people who are just surviving on the strength of that 10%, 12%, 18%, let's say you unchecked all the boxes. I'm just giving you an extreme scenario. There was an ability to make 18% money without actually doing anything. So that's sort of disappeared. And interesting, you should pick up that parallel of the Kirane wala, right? Because this is the service sort of stroke delivery model that we're used to. You will notice over time the big bazaars of the world and the geo marts of the world and the D-marts of the world really have taken over that space, right? So you didn't know what that guy was giving you in terms of quantity, in terms of quality. You didn't know whether kacha bill, who asked for a bill for 6 eggs? Not you, not me. But now bill is sort of standard process. So what happened to that business? Also, you can draw some parallels. Also happened to this business, and therefore slowly that cottage industry started dying. It's not going to completely go away. Like I said, it will probably hover at around 25, 30%. But from your halcyon days of 100%, if you're coming down to 30, then that's quite a shift.
Okay, interesting. So you have obviously mastered the art of service delivery. You crossed that chasm of being SME with a 10 to 100 to being a mid-sized business at 600 crores. Help me understand what have been your learnings around service delivery and being efficient at service delivery, running a tight ship. Because I imagine the only way you can make profit is if you are running an extremely tight ship.
Yeah, so cost is something that you can never afford to ignore. I don't know if you see this, but this is not really a fancy office that we're sitting out of, and all the offices are like this. So I think low margin business, it's very important to be cost conscious. It's very important to be efficient, generally efficient about everything that you do. So this is not a business where we have embroidered toilet paper or anything like that. Right? It's not that kind of a business. So I think cost consciousness is one part. The second part, like you said, is service delivery. So here again, it's an ocean, right? So when I say loader to coder, it's quite a continuum. You have to pick, what battles are you going to fight, and sort of create centers of excellence around those verticals or those industries or those domains, right? So internally, we have some bifurcation, we have some specialization, which allows us to do that. I think that's the second part. And like any service business, it's an agency business, right? You're only as good as your last delivery. It doesn't matter if you've been in existence for 20 plus years. How good you were with your last mandate. So it's sort of you live every day. And some days you die, some days you don't hear, some days you're the statue and some days you're the bird. So I think these are the few dynamics of the business. Again, working capital, access to institutional working capital, right? And not just sort of owner, either the owner pumps in money or you have accrued cash is only going to lead you thus far, right? You really need to sit down with your banker, be very good friends with them, and they need to be part of your journey. They need to understand the complexion of this business and so on and so forth. And then if you have access to institutional working capital, of course, things becomes orders of magnitude. Incidentally, only 50% of our business is what we call pay and collect, which is that we pay payroll first and then collect the money from the customer. The other 50% is collect and pay. So we do have customers that have decent cash flows that indulge us and say, "Okay, I'll pay you on the date of payroll, so that your cash flows are not straight. So even striking that balance, saying, look, no, I'm not going to go out on a limb and stretch my cash flow unnecessarily, and so on and so forth. It's a balancing act, as is any sort of low margin business.
Do you offer different commercials to collect and pay versus pay and collect customers?
Yes, because automatically you are loading the cost of capital as well as the risk to capital. If margins are thin, in this business, generally you don't run the risk of default because your customers are blue chip. But there might be arguments, there might be corrections, there might be this, there might be that. So definitely the commercials are different. So there is a risk adjusted capital cost that we levy to customers. And working capital is also a scarce commodity, right? It's not infinite. You don't have line. You don't have a line that's infinite. So we have to be very judicious about sort of who will lend that line to.
Okay, interesting. And what role does technology play in being efficient at service delivery?
Very large, because see, technology by nature will bring in efficiencies, right? So really, at least the journey that we are undertaking in Buzzworks, we're sort of undergoing 3 phases, right? So the lowest common denominator, easiest use of technology is what I would call being technology enabled, which is that technology is a part of your business. It may reduces errors, it improves throughput, you have robotic process automation, you have this, you have that, systems are talking to systems, and so on and so forth. I think that's the first stage. I think the second stage is even more interesting, which is that you are technology led, which is the technology itself becomes, in some cases, a differentiator, and in some cases, a competitive sustainable advantage. It's a tough one to crack, right? I would say we are between stage 1 and stage 2 right now. But the third stage is even more interesting, which is that if you are a practitioner and you've got the second stage right, then there's no particular reason why technology can't be the product, right? Why can't this be offered to as a practice management software to, let's say, folks in the same domain, in the same geography, in the same domain, in other geographies? So then you really are getting into SaaS, except that your unbeatable advantage is that you're a practitioner. You're not just a coder, right? You're literally eating the dog food that you're eating your own dog food, not just serving it up to other people. So really, it's a journey for us. And right now we're between phase 1 and phase 2. So technology is a very, very large role to play in this business. In fact, I would submit that there is no business where technology does not have a role. And if you're thinking technology is not going to affect me, then it's not really technology's limitation. It's really a limitation of your imagination.
What does your technology roadmap look like? So you're attempting to reach stage 2. Describe what stage 2 will look like. What are the things you need to build?
Yeah, so stage 2 is fastest fingers first. Okay. Stage 2 is just fastest fingers first, right? So essentially, can I deliver quicker, better, and cheaper than my competitor? Because this business is commoditized, right? The same mandate that you're getting, and if I may draw parallels between this and the recruitment business, the same mandate that you're getting, 100 other people are getting, which is why I use the fastest fingers first analogy, right? And the first person that gets that candidate in through the door is really going to win. In the case of a recruitment agency, they're going to win a one-time recruitment fee. In our case, we sort of have 2 layers to the cake, right? So you win a one-time recruitment fee, which is not very large, but you also get sort of an annuity business because that person is on your rolls for the next 11 months, 22 months. And that's really the meat of the business, right? So how do we make sure that the process of candidate filtration is better than the competitor? How do we make sure that the process of candidate selection is better than the competitor? Right? Can we go back and check our own data? Because we've been in this business for quite some time now. So do we have what I would like to call an ideal candidate profile? Although this is documented, but this is not system driven. Your recruiter will have a general feel for what it takes to do this job, but it's not institutionalized. And it's definitely not part of the system, right? Those are the things that we're working on right now.
Okay, interesting. How do you achieve fastest finger first? How do you achieve speed? like in your sourcing? So from what I understand, speed in sourcing is a very strong differentiator, because it looks like your agreement is not an exclusive one with the client. Like if the
Yeah,
client
in most
wants,
cases, it's not,
okay,
although in some cases it is. But
okay,
for the purposes of this discussion, let's assume that it's not.
okay, okay. So what are the things you're doing to improve speed of sourcing?
I think the first thing we do is we create an ideal candidate profile, right? So you know this, being a practitioner in the same domain yourself, that there is a tendency to do resume stuffing at some point of time. Either it's an act of desperation or it's an act of, um, it's just sort of, how do I put it? Just marking your territory, so to speak, saying, "No, no, maine de diya pehle CV," that doesn't work, right? The resume stuffing doesn't work. So I think the strongest filter that you can apply is that the recruiter should only recruit. They should not shortlist.
Okay.
Right? So recruiter, in my mind, is a salesperson.
So recruiter is doing lead generation, not conversion.
Exactly. Right now, he or she is in charge of the entire process. Right from the top of the funnel to the bottom, they're in charge of the entire process. But where they are very effective is in the middle, which is to try and sell the job to the candidate. So the job of contact should be off-sourced or off-boarded to technology. And the job of communication should rest with the recruiter. Right? And then she should again sort of hand off for simple things like document collection, for example, or document verification, for example. Why exactly? When did this become the domain of the recruiter? And nobody's asking this question. Right. So really, if you can offload these two jobs, then you have a recruiter who's sitting and selling to candidates. I'm using these words fairly carefully, but really that is a recruiter's job. Right. Figuring out if this person is a fit for this job, or figuring out their interest levels and figuring out a good time to speak, is not really that job. Right. So instead of being full spectrum, if we can restrict them to just having conversations and just doing that selling that job to the candidate, then you get a big lift just by virtue of doing this. And we're not talking artificial intelligence, we're not talking any buzzwords, blockchain, not even getting into those territories, right?
Right. Okay, interesting. How do you? So, see, as you mentioned, I'm from the recruitment industry. So, to some extent, I know how, for example, you would source for a white collar job where you would go to a LinkedIn or a Naukri. But I'm curious to know how you would source for blue collar jobs. Are there like a Naukri LinkedIn alternative for blue collar sourcing? How do you build that muscle?
Yeah, so unfortunately, there is not. But to your sort of submission, again, whether it's Naukri or whether it's LinkedIn, any sort of database loses what I call potency after 6 months, right? So I think the first job is to have lots of data. We're very fortunate in that respect, in the sense that we have more than one tie-up with government at the state level, right? So some amount of mobilization or some amount of, let's say, access to potential job seekers, especially in tier 2 and tier 3 cities, is actually being provided by these tie-ups, right? So I think that's the first part. So that gets us a sort of large funnel in through the door. And then, like I said, on the background, you have to keep this data fresh, right? Because it's not, that person might be qualified for the job, but they may not be interested in picking up that job right now. So, how do you keep, again, I use this very loosely, a warm bench of potential candidates ready is the question. And obviously, you can't do it through a portal. But, whether it's Naukri, whether it's LinkedIn, or whether it's Shine, I mean, there's no point, there's no merit in having a CV, right? If that CV is 6 months old, then it's got no value. That's one. And the second thing is also what I would say is that CV in context. So great competence, but if they're not ready to join, or if they're not looking for a job, then really that data point is not relevant to your current circumstance. So really keeping a database fresh and ready is the key. So blue collar is a little different. in the sense that you
How
can
does
get
the
on the
government give
street.
you data? You said you have these government tie-ups for
Yeah,
access
so we
to.
have tie-ups with 3 governments right now. And what they do is they have ministries for labor, for entrepreneurship, for skill development. Right? I can give you 2 examples. We have tie-ups both with the government of Maharashtra as well as the government of Tamil Nadu. And what they do is they sort of figure out the supply side of the equation. So they keep doing job fairs and melas, which the Rozgar office used to do by themselves, right? But now they're doing it in concert with private players like us, so that we give more jobs to the table, right? Previously, the sort of the big deal was a government job, right? Back in the day, or even now, you see these sort of headlines saying 10,000 jobs and probably 20 million applicants or whatever it is. It's not going away in a hurry. But I think folks have realized that if there's only 10,000 such jobs, and if I am the 11,000th candidate, maybe I should look at other options. So that's one way that we get support on the supply side. And of course, then we bring demand to the table. And hopefully there is a match for both of these. So we're also on the verge of signing another agreement with another government. It's not signed yet, so I can't name the government. But again, it's a source of supply. State governments are really a source of supply. And private employers like us are bringing demand into the equation, which is a very good sign, or generally a positive trend.
In the blue collar hiring space, there have, like Apna is a unicorn here. Is there an opportunity to have like a Naukri alternative here, and what would it look like? I mean, just purely hypothetical discussion.
I think, though definitely there is enough. India, everything is multiplied by 148 crores. So really, we have no dearth of numbers. We have no dearth of unicorns. Really, we're not constrained in that sense of the word. At least from a multiplier, we don't suffer that problem. We don't have a multiplier shortage, right? The question is what is being multiplied. So I think, and we did, to be very honest, we did try our hand at this in the middle of the pandemic, but it ended in tears. I can tell you what our version was because it's failed now.
Yeah.
So
I would love to hear that. Yes.
I'll be very honest about our failures, right? I think what we decided and what we said was that, look, this person who's applying for this job is not going to be literate, right? So the only literacy that we are assuming is numeric literacy, right? So they may not even have the ability to generate a CV, to be honest. And really, nobody is going to hire you on the strength of your CV, right? If the job is something like a loader, which requires physical characteristics, let's say more than soft skills, then really that's what you're looking at. So what we had designed at that point of time was a video resume service. So in 1 minute, sort of you uploaded your video resume, and sort of you backed it up with other documents, right? So Aadhaar, for example. Then we discovered people didn't have PAN cards. Surprisingly, a lot of people had driving licenses. I'm not surprised about it, considering the ease with which you can get a driving license in India. But driving license and Aadhaar were our two sort of document uploads, because Aadhaar really serves as not just a biometric identifier, but the government has done a lot of deep work, right? DII has done a lot of deep work on making sure the date of birth is right and so on and so forth. So we really tried a 1 minute video upload saying, look, this is the guy, do you want to hire him or not? So the employer is only going through video resumes. I think that idea will still work, but maybe we were not the right people to execute it. So completely radically different from a Naukri, not the traditional job board.
I'm guessing the like attracting employers would be relatively easy, but onboarding supply would need a lot of cash burn, right? Like,
see, I think if you're and basically this is not even a job board. Actually, I think you made a very sort of pertinent point, which is that this is not a job board. This is essentially now a marketplace. Right? It's not really a job board. So I would sort of stretch that argument a little further and say, to be a marketplace, you need to do 3 things, right? The first thing that you mentioned is that you need to maintain liquidity. So liquidity essentially is to balance demand with supply or vice versa. I think it's important to lead with demand. Supply can be created. I don't see that problem, right? And you're right. In retrospect, we should have probably put sort of 10 job descriptions out instead of focusing so much on the resume building part of it, right? So you're right. I think the second thing that a marketplace does is also have some kind of rating, fulfillment, logistics, call it what you may, right? So sort of complete the loop in some sense of the word. Is this guy a good person to hire? Does he have a star rating, for example? I'm just using some terms that we're all
Like
comfortable with
curation,
other markets.
basically. Curation, category selection, stuff like
Correct.
that.
Category selection, curation, and is the loop getting completed? Is there issue with the demand side? Is there an issue with the supply side? So sort of reputation management, very loosely. And the third piece, which is also very important, is dispute resolution, right? So if you go to an e-commerce marketplace, you will notice that dispute resolution is seamless. It's not just the logistics that is seamless; it's also the returns that are seamless, right? It's also the cash refund that is seamless. So I think if you're really building a platform, you need to take care of these three things, and not just demand and supply, which of course is the start of the journey.
Interesting.
Yeah,
Interesting.
but good point. We should have led with demand. Always lead with demand.
Okay. Interesting. Tell me your own journey, like that 0 to 10 crore and then 10 to 100 and then 100 to 600 crore. Each phase must have had different challenges to overcome. How old were you when you started this business? What led you to take the plunge and get into this?
See, I can romanticize this, but I don't want to. So there are sort of two categories of entrepreneurs in my mind, right? One is entrepreneurs by design. One day I just wake up, I have an epiphany, there's a large problem to be solved. I go after solving it and stuff like that. Now
I don't think such entrepreneurs exist, to be honest.
maybe they do, but that is not my story. I'll be honest.
These are
Maybe
stories made after,
after the fact.
After the fact, absolutely. They're like creating a narrative around.
Absolutely. So that's definitely not my story. So I'll start with. So I had an entrepreneurial streak. In fact, I started a t-shirt printing company way back when. And this is why I keep alluding to the fact that most businesses are probably mildly illegal when they start, right? So I think 16, I decided that, these rock band t-shirts, and there was a paucity of them way back in the early 90s. I said, why don't we have rock band t-shirts, right? So maybe we should make some. So I hired a person who just used to do fabric painting on a regular t-shirt, and sort of sell it to my friends and family and whoever it was, right? So I had that first. Now, this business is actually patently illegal, right? Because you never consulted with Iron Maiden, you never consulted with Jethro Tull, you never really went and asked them what their opinion was. But, we'll slide, it's just a couple of hundred t-shirts. So that was my first brush with business. And then, of course, I have a very spotty academic career. So spotty in the sense I'm a college dropout, right? And the very fact that I passed school is a miracle. I'll be honest with you. I don't know
Like your bachelor's degree, you dropped out.
That's right.
Okay.
So I sold the last seat that I got into. I literally sold that seat to the highest bidder and came back. And my father, rightly so, said, look, I'm not going to invest any more time, effort, and money in this endeavor because it's going nowhere. And I think he was absolutely entitled to slightly more. I'm just giving you the polite version of what he said. So I had a decent command of English, so I got into copywriting, which was my first job. And then slowly I got into RJ, right? And sort of the insight here is that at least in my life, 70% of the time, you just have to land up. That way it's easy, right? You just have to land up or put up your hand or do whatever it is that required to get done. And then I became a DJ. So I had 3 jobs. I used to be sort of working 18 hours a day. And work-life balance, there was no such concept in my life. So I had these 3 jobs. Unfortunately, I picked up Panga with my only full-time job that I had. So the copywriting agency, the agency folded, and this was a perfect storm. The nightclub went into renovation, and then the only job that I had, better said should have prevailed, right? Saying this is the only job you have to protect it. I picked up panga with my boss, right? And all of this happened I went from being completely employed to being completely unemployed in less than 3 months.
Wow.
Uh,
Okay.
right? All of it, some of it was not my doing, but most of it was my doing. So I said, okay, I have to start a business now, because back in the day, if you weren't a graduate, you couldn't get a job. You couldn't even get confirmed even if you had a job. This was really, we're talking 95, 96, no, later than that, maybe 99, thereabouts, 1999, right?
I mean, even today, 90% of employers would probably not want to hire somebody who's a college dropout. I mean, at that time, it must have been 100%, but even today, large part of employers will hesitate for a white collar job to hire someone who's a college dropout.
Yeah, but I can think of, the number of job descriptions are also dramatically exploded, right? So let's say, for example, if you want to be a copywriter in a small ad agency, they're not going to look at your degree certificate, even today. Right? So I would say the number of options have expanded, and we have become more relaxed about, we have genuinely become more relaxed about educational qualifications, but this wasn't true in 99, or maybe even late 99, early 2000. So the only thing that I could, so these are entrepreneurs by design, which I'm not. So I'm an entrepreneur by default, right? So one of the jobs, in fact, the only steady job that I held was Times of India. The one I picked up panga with my boss, that was Times of India, right? I was an RJ for Times FM, which is now basically Radio Mirchi. And essentially Times also used to do a lot of events, Femina Miss India. Actually, interesting footnote, I have hosted the Filmfare Awards in 1997. Not because I had any mega talent, right? Filmfare South, not Filmfare, the main Filmfare, but Filmfare also has a South edition. Basically, Javed Jaffrey was the host, fell ill. They couldn't find somebody at the last minute. They said, this guy's a blabbermouth, just put him on stage, he'll run with it. And I ran with it. Literally.
Wow, amazing.
So, I had some event experience, right? Because Times of India had a lot of event properties, Brand Equity Quiz, Filmfare Awards, Femina Miss India, you name it, they had tons of events, right? So I said, ठीक है, फिर event agency खोल लेते हैं. Because I've done a few events and I know how to run this.
Which explains the name now. Buzzworks is a good name for an event agency.
Interestingly, so this name came from, so remember I used to be a copywriter in an ad agency. So I had a boss in that agency. He used to tell me, keep your name as generic as possible. Like tomorrow, if you want to start a circus.
Good advice. Yeah.
If you can plug Buzzworks into a circus, it'll probably work. Also, it didn't hurt that the .com was available, right? So we picked up the .com back in the day. Okay. So that was like my entrepreneurship journey, right? And you always have this issue of an anchor client. So the 0 to 1 problem is really quite severe. How do you get your first customers? How do you get your first billing? I can say all this now, but back in the day, it wasn't easy, right? So your anchor customer has to be somebody that is referenceable and that is really big, right? I have nothing against small companies, right? But you can't really go to another enterprise customer or another big customer and say, I work with C Karthic and Sons. That really doesn't carry any cachet. So believe it or not, my first customer was Microsoft, right? And that's really interesting. So I walked into the Microsoft. This is where sort of I am being economical with the truth, right? I just needed a work order from Microsoft and a sort of certificate saying, yeah, this guy does things well. So I walked into the Microsoft office. Remember, this was in Chennai in 99, 2000, freshly unemployed. And I sat down, and generally, I think another point that I want to make is in that 0 to 1 journey in any startup. Of course, we are not that now, but I'm guessing that a lot of folks that are tuning into this podcast are startups or thinking about entrepreneurship. You have to be a salesperson. It's not optional. I don't care if you're a coder, you still need to know how to sell. Right? Selling is something that you need to know, without which you just cannot run a business. Cannot. And you can't hire a salesperson, you have to do it yourself. Right? The first few clients you have to get. Anyway, so I went into the Microsoft office and I told them, look, I'm an event guy, I've done this, I've done that. It helped, of course, that I sort of hosted Filmfare Awards, right? That was a big thing. So I said, look, I can do events for you. That guy, short of showing me outside the office, did everything else. He said, boss, all this doesn't happen here. It happens in Delhi. You'll have to go to Delhi. I said, boss, ye to kuch zyada ho gaya abhi. And your bank balance is also running low because the first thing you miss when you quit your job is your paycheck, right?
Right.
Suddenly that just sort of stops coming in. So out of desperation, I told him, I said, sir, there must be something that I can do, right? Something, anything. I think he sort of saw that on my face. He said, look, I have a market research survey. It was as far from events as possible. I think, if I'm not mistaken, he had 100 dealers and he was willing to pay 60 rupees per dealer, or he had 60 dealers, then he was willing to pay $100 a dealer, whatever it was. The size of the check was $6,000, right? So he said, if you want to do this, you do this. This is the only thing I have. But this I can do right now. I said, okay, let's do it. And I did that market research survey. And I got a letter from him. And of course, even though it was market research, not all that glamorous, you still put your heart into it. And to cut a long story short, he cut me a check, or he got a check. And then I realized that I needed to have a bank account, right? I can't just take the check in my name. I needed a business.
Right.
So I went to my bank manager. He said, look, sole proprietary, you don't need to do anything. Just think of any name and we'll enter it and sort of open this business, right? So that is how sort of Buzzworks came to be, and that is how we got our first check. The second client that I walked into was Standard Chartered. They had the typical question, who is your current client? I said, Microsoft. So sort of that 0 to 1 journey, it's not smooth. It's not a straight line. It's very jagged. Getting that clear off the ground takes a lot of effort and a lot of luck and a lot of timing. I think people ignore luck and timing. Everybody talks about effort. Everybody talks about intelligence. Everybody talks about all these things. But really, if that person had not listened to me at that point in time, or he hadn't given me a market research survey, or let's say I had the ego to not do it, say, no, I will not do this, maybe this company wouldn't have been set up. So luck and timing, I think, are things that people ignore that have a very large bearing on how businesses grow. I don't know if I've answered at least I've answered the 0 to 1 question.
Yeah, absolutely. How did you discover the gold in the staffing market?
All by accident. I'm telling you, all by accident. So my entire entrepreneurship journey is only by default. So we come to the second client, right? Standard Chartered. What were they hiring me for? Not glamorous events, but promotion. People holding up placards saying, please buy a Standard Chartered credit card. Very sort of below the line stuff, right? One of those assistant managers took a shine to me and said, okay, you're working really hard and so on and so forth. He didn't realize I had no options. Microsoft was a one-off. So Standard Chartered was the only customer at that point of time, right? So one of his vendors sort of ate the money, right? Remember, this was a bank, so they were business. They used to give money first, and then all he had to do was run payroll back in the day. And this guy wasn't even doing that job, right? So he called me. He said, what do you know about staffing? I said, nothing. He said, look, I'm going to start this business for you. Just trust me, right? And back in the day, you could trust clients. If somebody said, actually trust them. Or maybe I was naive and foolish. I don't know what the equation was, but we trusted each other. He said, look, I'll teach you the ropes of the business. I just need somebody who I have trust and faith in. Because you're going to be handling large amounts of money, you're going to be handling the reputation and so on and so forth. And really, the number of things that you learn from your first few customers very quickly become the DNA of the company, right? Because you need to be aligned to sort of deliver that service. Stanchart, I'm very happy to report, is still a customer of ours 23 years down the line. The amount of things that we've learned from them is just amazing. So that's how we got into the staffing market. Literally.
You're so right about just showing up and being consistent. And that's such an important part of building a business.
Yeah. And every other vertical that we built is all customer led. So again, going back to the sort of narrative of कि मेरे को idea आया and so on and so forth, I'm very intellectually lazy. My sort of very simple trigger to start a new business is a customer problem. I keep asking customers only one question. So what kind of problem do you have, right? And of course, now you are a little world weary. So you don't just stop at that question. You also say, look, do 10 other guys have this problem? Because you need to build a large business, right? You're not just happy running a lifestyle business or a mom and pop shop business. But if the problem is large, if it's acute, and if it's growing, either you solve it or somebody else will. And literally every business that we started is the same logic.
Give me examples.
Same logic.
Like,
So the third
what?
business we started was so the unfortunate problem with this is that you get pulled in all directions, right? So very quickly you don't stand for anything. And I'll come back to how we sort of started standing for a few things, right? So people realize that you are a problem solver. People realize that you were creative. People realize that you were diligent, committed. You delivered on your promises and so on and so forth. Another guy, again from Standard Chartered, right, came up and said, "What do you know about rewards and recognition?" Well, I have a standard templated answer by now. Nothing. He said, "Look," he said, "Look, I have an agency, like at that point of time, if I'm not mistaken, the largest agency in the world, ad agency, who is giving me a presentation on Monday. This discussion is happening on Friday evening. And I'm sitting in Chennai, and this guy sits out of Bangalore. He just come on a visit, right? So he says, "Look, I have this agency meeting on Monday. I know it's just going to be a PPT. They're just going to do some sort of random stuff and throw some stuff in my face. Your advantage is that you know the business. So why don't you get your head wrapped around R&R? Because you do stuffing for this business. You understand the nuances of this business. So why don't you get your head wrapped around R&R and come and make a presentation to me? Don't make it glitzy. Just make sure it has substance. And I will entertain you on Monday." So basically Saturday and Sunday, I had to digest everything about R&R. Right? Monday we landed with the presentation. Long story short, we got the order. We were debating the retailer. So this guy said, "Look, how much is it going to cost you to set up sort of shop in Bangalore and service me?" I just threw a number at the top of my head. I said, and this is back in the day, I said, "It's going to cost me $1.5 lakh, just like that." He said, "Okay, done. You have the order." Those days must have quoted 5 or 6 lakhs for the same job. So that's how we got into that business.
Oh, what is a R&R business? What do you do in that? Like
rewards and recognition.
But what do you do?
You have a large channel. Let's say, for example, you have a large channel. You have tens of thousands of sales force. How do you keep them motivated? How do you recognize these folks? How do you reward these folks so that they don't attrit?
Okay.
Or at least, how do you bring that attrition down?
Like the dealer events which companies organize for the dealer.
Yeah, but that's only for the dealer. We used to run this from the sales force.
Okay.
Like the folks that actually sold you the cars or the appliances or the credit cards or the personal loans, whoever that was. There were thousands of these folks. And I would say we did a reasonable job. So we were globally one of the best practices to follow. We ran that program for 5 years.
Wow.
And in Snapchat, there's something called Leading the Way. So the program we started was part of Leading the Way, saying this is a global best practice that other geographies should follow. Yeah, so interesting. So you keep just asking, saying, "What is your problem?" Sometimes the client himself will come. See, if the customer comes to you with a problem, that problem is already acute because he's coming to you.
Right.
So there is some merit in being intellectually lazy about these things, right? If someone is coming to you explicitly and saying, "Boss, this is my problem," then obviously nobody has the solution, and there might be money in providing that solution to a customer.
So how did the focus come back then? Like, because now you're doing staffing and events both. Like R&R sounds to me
No, we shut all that down. So we started another business. So see, this becomes a virtuous cycle. Sometimes it's vicious, sometimes it's virtuous. Acha, tune ye solve kar diya. Because you have the problem solver tag attached to you, every problem will now start coming to your tag. It's not necessarily a good thing. Right?
What was the next business you started?
The next business was call center software. Now this is about as far removed from these businesses have nothing to do with each other.
Right. So
यार कॉल सेंटर सॉफ्टवेयर बना के दे दे भाई ये सब तो ठीक था so far this is all nice, good fun, but now you're asking me to make a piece of software that is a different kettle of fish, right? I don't know anything about software. So client का short answer यार तो figure out कर लेगा, you'll do it. And sometimes that trust and sometimes that sort of faith, sometimes this makes you do magical things there. So we built a call center software business. बना दिया मैंने.
Like, do you still run that?
Yeah, it's a multi-million-dollar business. It's part of our portfolio now. So.
Oh wow, what's it called?
Same thing, Buzzworks, no? Remember the circus thing? Everything fits under Buzzworks. Same balance sheet, same P&L, everything same.
Okay. So this 600 CR top line you've told me, this is only for the staffing business. Not it
Yeah.
doesn't
So
include the.
I'll sort of come to 2009. Banking
Okay.
crisis happened.
Yeah.
We didn't diversify. So we literally got slapped in the face because 90% of our business was from banks, right? So we had to take some very hard
And
calls.
what percentage was from StanChat?
80%, I guess.
Okay. Okay. Okay.
Right? So really we woke up to a not so great future, right? And then we had to take some calls saying, what are we going to keep and what are we going to let go of, right? So events is also a cash guzzling business. We had to let go of that. So we sold it back to the employees. Our employees were keen on driving that, but I wasn't so keen on doing it. And then loyalty, the R&R business, we again sold back to employees saying, look, we want to run this. I know you don't like this business because it's cash guzzling or too much capital is getting locked up. So basically the two businesses that we were left with were staffing and software. And I'm glossing over it, but folks took a 50% pay cut. So we had two choices. We could have fired 50% of the people, or everybody could have taken a 50% pay cut. Right? So we floated both options. And I must say it's a testament not to me, but to the sort of folks that we have working in the business. Unanimously, everybody took a 50% pay cut. They said, we'll not let a single job go.
Amazing.
Right? We will not lay off any of our colleagues. I mean, you can also call it collective punishment. There are many ways to look at the same thing. But I'm very proud of the fact that they all banded together.
There are two types of employees you have, right? One is your own team, and second is employees who are on your payroll, though are technically like working for your clients. So
yeah.
You must have had to lay off the second variety, your payroll, but working for clients.
Yeah, 14. Yeah. And they really took a very bold decision. It's not easy. I mean, everybody has EMIs, everybody has personal loans and sort of all sorts of commitments and liabilities, right? It's not easy to take that call. And it's not easy to take that call universally, unequivocally, and unanimously, right? I'm very proud of that. Very proud of that. And really, in the middle of a crisis is when your organization truly, the true nature of that organization actually comes through only in a crisis.
Yes. Right? So true.
So we were left with these two businesses, staffing and software. And we slowly started growing these businesses. Staffing, we started splitting into verticals. We realized that these verticals are growing bigger. So banking, financial services is one vertical. Non-IT, which is manufacturing, e-commerce, logistics is another vertical. Each of these are a couple of 100 crores. And IT is a separate vertical now. IT by itself is about 120, 130 crores. Really in the top 10 in the country, only in IT. And of course, we had this fourth vertical called software, which did extremely well. We still have it. But wo keeda hai, so we started a fifth vertical. We said, boss, if you're doing this, why don't we send people abroad also? So we got our, I personally, Akshay, I like businesses or I like industries where the industry is not organized. There is very large sort of merit, wealth creation, value generation, revenue potential in organizing something that is not organized, right? Whether it's your pan ki theli, whether it's your grocery, or whether it's sort of international recruitment, there's very large merit. These things I get sucked into automatically if I see a potential to organize something that is not organized. Right? This is a very big kick for me. So we started that business. And then COVID happened.
What is this sending abroad? Like you're saying?
So we are an international recruitment agent. Every year we send a couple of thousand people abroad to GCC, to Europe, and so on and so forth. So
and this is what, blue collar, white collar?
It's a mix of everything, but majority is blue and grey collar. Majority. 90% of the business is blue and grey collar. Right. But again, India is the largest sort of exporter of manpower in the world, right? And you don't have a single sort of significant organized player in this market.
I guess it's mostly like very small unorganized players. Like city
Yeah.
specific, who would probably charge something to the person whom they are sending abroad,
Correct.
which you would not be doing, right? Because you
No,
charge
we
the
take everything in
employer.
check. No, we take everything in check. Everything is above board. We don't do any exploitation. We don't send people on visit visa. We are organizing that market. So it's a bit of a long haul. You know, uh, you're
But
going to leave.
it's an interesting play. Like the long
Absolutely.
term potential, the TAM is large here, obviously.
Very large. Very large. Very
Mm.
large.
How does it work monetarily? Is it the same thing like monthly payroll? You get a percentage of that, or is it a one
No,
time
this is a
piece?
pure recruitment business. This is a pure recruitment business.
Okay,
But
like a
see,
one time
typically what
piece.
happens is it's a one-time fees. Sometimes you collect from the candidate and sometimes you collect from the employer, depending on terms and conditions. Blue collar, typically you collect from the candidate. Gray collar,
Okay.
typically you collect from the candidate. White collar, typically you collect from the employer. Right? But there are
Okay.
exceptions to these rules. Right? Um, but I think what is interesting in this business is that A, it's unorganized. That's the big part. B, it's a very large business. So imagine literally 400,000 people, 4 lakh people going abroad, right,
Yes.
every
Yes.
year. And that number
Very
is not
large
going to
TAM.
come down. It's only going to go up. It's very large time. And the official rate is 30,000 bucks. Right. And I also am interested in businesses that look like one time but are actually annuity.
Okay.
So this, annuity is always a better business, right? I think all of us
Yeah.
accept that
Yes.
annuity is a better business than a one-time business, right? It's a
Yes.
no-brainer.
Yes.
This
Right.
business looks like a one-time business, but it's actually an annuity business. Let me explain this to you, right? So typically what happens is people go there on work visas, and the length of these visas are 2 years, right? So you can't recycle the same guy, but the employer is basically, his churn is 50% whether you like it or not.
Right. Yeah.
Right.
Yeah.
So from a demand side, this is actually annuity.
Mm.
And it's high margin. It's not low margin.
For blue collar, you said you take the employee pays. Do they pay after they get placed? Like, is it from their salary, or do they have to pay before they get placed, or how does that happen? Because that sounds like a
You
little
pay
bit of
me
challenge.
only before you board the flight. We don't take any advance. See, there's a lot of malpractices in this business.
Right.
Lots. People will take your passport, they will take a couple of lakhs, they'll just put it into their pocket, uh, they'll send you on a visit visa. There's all sort of malpractices. We don't do any of that stuff, right? We will not send you on a visit visa. We will not make a commitment. If the employer selects you, they will send us a visa, sort of a work visa in your name, right? Only post that work visa getting stamped on your passport do you pay. There's
Okay.
something called PDOT, right? Then you receive your visa back, and then you're ready to depart the flight. Before that, I have to give you something called pre-departure orientation training.
Okay.
That payment you have to bring to me as a demand draft. I don't accept cash.
Okay. Interesting. And how do you build demand for this? Like, you have salespeople in these countries who are going to employers. Okay.
Yeah.
Okay.
So in GCC alone, we have 4 sales folks. 3 in Saudi Arabia, 1 in Dubai. And we'll keep expanding as the region keeps expanding. But to be honest, the geographies that we are in is probably 85% of demand. Saudi is about 80% of demand in the GCC, and Dubai is about 5%. So
Right.
if you've covered 85%, sort of you optimize after you maximize. No? So first you
Yes.
maximize the potential of these regions. And just as a quick insight, Saudi has a particular image in people's minds, right? Whatever that image is. I've been there. Let me tell you that both these countries have visa on arrival if you have a US visa. Both of these
Right.
countries.
Okay.
Saudi Arabia as well as Dubai, right? If you already have a US visa on your passport, both countries have visa on arrival. Dubai, the visa on arrival, they're fairly polished and it's a well-oiled machine. Dubai, the visa on arrival, if I'm not mistaken, is about 200 dirhams. And Riyal dirham, the exchange rate is almost 1:1, right? And you get a one-time visa, which is valid for 15 days, and it takes you half an hour. The Saudi visa is a 1-year multiple entry visa, which costs you twice of that. Costs you about 400 riyals. right? 1 year multiple entry visa, length of visit is 90 days, visa issuance is 5 minutes.
Wow.
They're open for business.
Okay. Amazing.
The way a country treats sort of people who are coming in to do business with them says a lot about how open they are for business.
Right.
I think for all the folks that are in this podcast and are sort of, have some views around Saudi Arabia, please go visit that country. I can guarantee you that your views will undergo a change. That's for sure.
Amazing. Okay. And how much of your top line comes from this? And give me a breakdown of that 600 crore now. How much is from call center software? How much from
Call center is a couple of $1 million, 10, 15 crores, best at tops, right?
Okay.
Now this is this is a value business. This is a SaaS model. We don't say SaaS, this and all that. See, because enterprise customers want what they want.
Right.
See, this is the first rule of enterprise customers, right? They're not interested in what you have. They're interested in the solution to their problems, and their sort of purchase orders are so large enough that as a vendor, it's their way or the highway, right? So we're not stuck on terminologies. We are sort of more stuck on outcomes, right? So banks especially are very, very cagey about cloud. They're very cagey about these things, right? They run a lot of stuff on-prem. So we have sort of just internal nomenclature. I don't want to introduce one more buzzword into an already confused startup vocabulary. But we provide technology as a service. And what this essentially means is whatever it takes to get your job done. So if it's only software that you require, we provide that. If you want software plus servers because you have issues or you want that SLA on us, then we provide that. In some cases, we've gone to software plus servers plus desktops for a whole host of reasons which we'll not discuss in a podcast. But that's what the customer wants.
Yeah.
And if they're willing to pay for it, then you provide it, right?
Right.
So that's how it goes. So 90% of the business is staffing. In fact, I would wager 96% of the business is staffing. Barely 1% is this new business, which is sending people abroad, what we call global placements. And software is a couple of $1 million, 12-14 crores in revenue.
Why do you run all three under the same P&L? Why not have separate entities?
Administratively easier. Everybody can draw from the same bank account.
I mean, you
Everybody
could
gets the same
have like
PSC fund.
kind of a co-founder for each of these new businesses who would bring in the energy and drive. And because there is some ownership, even if it's like maybe 10% ownership, but there is ownership for him to scale up that business. And
oh, sorry. So maybe I didn't make this statement, and that's sort of my fault. I don't run the business. FYI. I don't run any of these businesses. Right?
Absolutely.
Operationally, day to day, it's run by a business head, right? And that person is no short of a divine entity in Buzzworks. So the business head is the owner of the business. I am not the owner of the business. So if you have 5 businesses, then those 5 businesses sort of are headed by business heads. The authority to hire, the authority to fire, they decide their own compensations, they decide their own incentives. I'm really sort of just an aggregator of these businesses, truth be told. Right? And they also have stake in the company. So it's not like they're employees.
Okay. They have stake in the larger entity.
Absolutely. Which makes more sense. See, Akshay splitting it, right, is a clerical decision that will take you 15 days to effect. Let's assume that you have a buyer for any one of these businesses, right? And they're insisting on a cleavage because they only want to buy that business, or you want to list one of these businesses, let's say, right? Or whatever it is. For some reason, you want to split this business. It's a 15-day job. So I think putting these businesses together has more advantage in terms of lower administrative overhead, same HR, same brand, same everything. And, like I said, I'm a very big fan of maximization before optimization. We get into all these optimization loops in our lives, right? Ye optimize hona chahiye, wo optimize hona chahiye. Like I'll optimize my coffee, but or whatever it is. There's the Starbucks thing. Every day you spend $5 on your Starbucks. If you save all your money, then you can become a millionaire by the time you're 50 or something. Some sort of You probably lead a very miserable sort of 30 years becoming that millionaire. So why don't you just earn $5 more a day? That's a better and have your coffee. So maximization before optimization, at least, is sort of my mantra.
Can you zoom in a bit on this maximization before optimization?
So first you capture all the revenue, all the opportunity, whatever it is that. So it's a corollary of a saying, at least in computer science, saying premature optimization is the root of all evil. I use a startup analogy to sort of explain this better, right? So when you start a company, right, and this is a new entity, this sort of global placement business is barely 3-4 years old, and 2 years were taken away by COVID, right? So it's a 2-year-old business. Now, really, what is our job, or what is that person's job, or what is that business's job, right? Again, there are many definitions for a startup. I'm just going to sort of insert my own definition here. And my definition of a startup is a construct that is trying to figure out what to scale, right? So discovery is front and center. Okay, boss, which set of customers will pay me the maximum for this, or which set of supply guys, or which set of consumers can I extract money from, whatever those sort of discoveries are.
What products?
Am I solving a large enough problem? Correct. And so on and so forth, right? So you have to maximize discovery, right? Now imagine a startup sort of started on day one, and again I go back saying I'm not asking you to have monogram bath towels. Don't waste any money. But let's say, for example, your website is not optimized, or let's say your AWS is not optimized, or your cash flow is positive, but your profitability is not optimized. It's perfectly fine. It's perfectly fine. So your target should be, look, can I get 100 customers like this? Can I bill all of them a crore each, and therefore generate 100 crore business? And then I figure out, boss, it's a bit of a TikTok sequence, right? Or a TikTok cadence. So in take is I figure out what to scale. And once I've done that, let's say I've reached a certain threshold, let's say 10 crores, you don't need to wait to 100 crores. And then can I optimize for org structure? Then can I optimize for cost? And then I repeat that cycle again, right? So if I start saving for this, I've sort of lost sight of my primary agenda, which is to figure out what to scale. I don't know if I've explained this.
Somewhat. This is probably the reason why people coming from scaled up companies, businesses struggle in a startup environment, because they come from an optimization mindset. Like someone who's worked in a large company is good at optimizing, whereas in a startup, you need a maximization mindset. So
absolutely,
where probably that cultural...
Because the large company is already maximized. No? They're already running 100 crore top line or whatever it is. That thing has already been maximized. So I think it's a fundamental sort of mindset that you carry, right? So maximize before you optimize. I'm not saying
very interesting. Very interesting.
Yeah, but this is not the time for it.
How do you hire? How do you build your own team? What are some insights around what has worked for you?
See, some of this is going to be cliched, but again, cliches exist for a reason. Because they're true.
Yeah.
Right. So I think the thing that is bandied about very often in any organization of any size is that you always hire for culture. I think this is something we found out the very hard way. Right. But a corollary to that statement is, have you defined culture in the first place?
Okay. Right.
Right. And more importantly, do you practice it? Right. So in our case, and you know what? Who is that culture serving? So these are sort of important questions before you start hiring for cultures, right? Have you decided what culture it is? Have you defined that culture? Which is, have you codified it? And then do you practice it on a daily basis? Because to be honest, you can run this in the reverse order and it will still be true, right? Which is that culture is something that you do on a daily basis. It's not a poster that's hanging on the wall. Typical culture exercises are, let's spend a weekend of this and चार शब्द निकलेंगे, उसका एक अच्छा सा acronym बना लेते हैं. It has to fit into an acronym. This becomes important. And then we design a fancy poster around it, and that is our culture. Right?
Yeah.
I think that part we took very seriously, right? So culture is what helps your organization serve your customers better. So it's not inward chasing. I think that's the first sort of insight I have about culture, right? Every organization has a culture, but the purpose of that culture is to serve the customer. It is not so that you can sing Kumbaya around the fire, right? So that's the first part. Now, if you figure that out, then it's important to codify it. And it should be something that your office boy understands. So my asset test of culture is not the C level. My asset test of the culture is when I go and ask my office boy, "Bhai, tere ko aata hai kya? What is it that you understand?" Even if he can explain it to me in the vernacular, I'm okay. And therefore, it can't be very long. Then you fit an acronym on top of it. I'm not saying you get away from it. See, मेरा भी अंदर का एक copywriter बाहर निकलता है बीच में. Right? I'm not saying you don't fit an acronym. Fit an acronym. But that is for understanding.
Right.
That is so that people can absorb it. And, it's easy to remember and it's easy to practice. And then you go and hire for it.
Tell me through your journey. Like, you've given me a general framework, but how did you discover what was your culture? How did you codify it? What was the pain you went through when you were hiring without realizing that you have to put culture first while hiring? What? Give me some examples of bad calls you took.
Many years. So I have fired more than one C-level person in the past, right? Because they were not a culture fit.
But what does that mean? Like, they didn't have that maximization.
So let me define our culture. Right?
Okay.
It's easier to define my culture than to say he was not a culture fit, right? So what does it take for a service agency, and that is who we are, to succeed in the contract staffing business? This is the fundamental question.
Yes.
Let's start from there.
Right.
So let's start with some basic things which people, at least a customer, is expecting. He's not taking for granted because आज की तारीख में कोई दे नहीं रहा है. But he's expecting, right? This is part of their consideration set, right? So the first thing is responsiveness, right? And what is responsiveness? Responsiveness is not an individual. The organization will respond to you with its entire might if required. It's not one guy burning the midnight oil. There will be 100 people burning that midnight oil just to make it possible, whatever that possible is, right? So that is responsiveness. Second piece is integrity, right? Integrity is do what you say what you do. Don't commit to a deadline if you don't see it not happening. This is integrity, right? In a small company, especially in a growing company like ours, right? Maybe not in a small company, because in a small company, generally everybody is very intimate, right? You have this sort of very family kind of thing going on. Under 50 people, we generally have that view. The moment you cross a 50 people, you are in 10 offices, this whole thing sort of goes out of the window, right? So that's very important for you to speak truth to power. It's not enough to have an open cabin. Anybody should be able to enter that cabin and tell the founder, "Sir, ye jo aap kar rahe ho na, this is the stupidest thing I've ever heard in my life." Right? Thoda ego ko taste pahunchta hai. I'm not, but at least the truth is being spoken, right? Or holding people accountable. See, typically what happens in a large organization is the things have so much momentum and so much maximization. No? Somebody that's not pulling their weight doesn't make a difference. Chalta rehta hai wo guy. Just on momentum, it keeps running. Right? That's not the case in a small organization. Somebody can actively, maybe not through intent, but they can genuinely sabotage progress. They can genuinely sabotage momentum. Right? So somebody needs to speak truth to power, not just to the boss, but to each other, across silos, across functions. Right? So this we call accountability. तब जाके तुम customer को service कर पाओ. Correct? And the last one is performance. So performance is typically a one-way street. Ki boss, I give you a target, finish that target. If you don't do that target, I will give you an incentive. Employee बेचारा उठ के ये नहीं बोलता है कि सर आप क्या कर रहे हो? How are you helping me on this journey? It needs to be a two-way street. Right? So let me come to the acronym. So I also dragged you into this. What a boss. Declared. So it's performance, accountability, integrity, responsiveness. Pair. This is our culture. We reward this culture. We practice it. And therefore we recruit for it. right? So
And
somebody who has the competence, let's say, for example, coming to your C-level question, somebody who has the competence, somebody who has the credentials, but is not responsive, is not integral, khatam ho gaya. He or she will not go to the next level in our organization, in any term. I don't know if I've answered your hiring for culture.
No,
But
no,
first, you have to
I
define
understood.
it. Before you hire for it, define it.
Right. Interesting. I understood the broad approach. So, what is you that coming back to the journey? 2008, you went through that slight downturn, then you decided to focus, and today you're a 600 crore business. I'm assuming in 2008 you would have been 100 crore or less than that, I guess.
From 30, we went to 7.
7 crore. Wow.
You will not forget these numbers. I will never forget these numbers.
Yeah, absolutely. So what was how did you scale that?
I think the first thing is we took around the money because we realized that even coming back to 30, 50, whatever it is, we needed money. Right? We were 90 days from shutdown. There was no way that this business was going to, in spite of all the SAC, because you built up a cost structure. And 30 to 70 is basically 75% of your revenue turnover, whatever it is gone. Your employees have taken a 50% pay cut. How much are you going to push them? Right? Kitna push karoge? You can't say no salaries. So if you need a recovery, you need capital, right? So we took a small amount of money. We had an investor who had faith in us, still has faith in us.
They're like a friend and family kind of a thing, or institution?
No. Just like I said, luck and timing was. Okay. It's very underestimated. So common introduction. That person had tried to be, was trying to become an Indian staffing company for ages. कोई उसको कोई भाव ही नहीं दे रहा था. Then common friend introduced both of us. I'll get a long story very short. We met for breakfast. We had been done before lunch.
Wow. Okay. Wow.
Some of what he was saying, I was just sort of, in my mind, I was saying, भाई ये गड्ढे से तो निकलूं पहले, ये सब अच्छी स्टोरी है. 100-200 करोड़ ये सब सुनने को बहुत अच्छा लग रहा है. But the bank guys, the collection guys have become my friends now. Literally वो मेरे कैबिन में आके चाय पी रहा है. सर आपसे जितना होता है ना उतना दे दो आप.
Right. Yeah.
So we really had a very big stroke of luck at the right time. We raised a round of capital. And then, of course, once you raise that round of capital, your mentality changes. Because now you have another shareholder in the business. You really have another partner. Whether you give away 1% or whether you give away 99% of the company. Most startups don't realize this. They consider the investor as somebody external. वो cap table में बैठ रहा है but धंधे के अंदर नहीं बैठ रहा है. Right? That is wrong. You have another stakeholder in your business. And sort of, they might be patient and so on and so forth. But it's very important to take that stakeholder into account. Right? And they've given you money to sort of scale. And therefore, scale is something that you need to demonstrate. So we cut all this down. We said, look, we're going to focus on 2 or 3 businesses. We're going to run a very tight ship. At that time, we picked up a professional CEO, but again, there was a culture mismatch. So we had to let that person go. We made mistakes. But we were very steadfast saying, this is a scalable business. We know that it's a multi-billion-dollar business. We know that if we get this culture right, we also know that it's a commoditized business. You don't get a rupee extra for being a multinational. You don't get a rupee discount for being an Indian company. So it's pari passu, right? All conditions are the same. So we said, if we run the ship right, we can definitely sort of go to the next level. And at 7 crores, really, your next level is 100 crores. Let me be honest, right? And, I want to share something here, which is very important. I think to some extent, your ambition is also the limit of your achievement. Imagine at that point of time, if I had set a target for 10,000 crores. Very difficult to do. When you have an existential crisis, to say some single digit crores, I will go to sort of whatever, 10,000 crores, very difficult. But I have made this mistake more than once in my life. I was not ambitious enough. Right? So it's very important to figure out not your local maxima. So while on the maximization thing, local maxima is what I can think of. But really global maxima is how big can this company become? And really I'm the sort of the biggest culprit of why Buzzworks is still hanging around that 500, 600 crore level. Of course, now we've reset those targets. We're going to 1,000 crores and we're saying, look, that is not a stop. At 1,000 crores, it needs to be a much better company than it is right now, and we're on that path. But if I'd added an extra zero at that point of time, I don't know what would have happened. So it's really important to, it's also very difficult to figure out sort of where the line is between ambition and delusion, right? So very quickly, this can be and certain it's a difficult thing, right?
Yeah. So true.
I don't have an answer for that question. Yeah. So that's how we we said 100, then we said 200. At 200, the bank started taking notice. And of course, one thing leads to another. The moment you start building that kind of momentum, a lot of magical things happen. Then other people want to join you. They see that you're the new kid on the block, you're doing good work. Customers want to work with you because you've crossed a certain threshold. You're in the position to sort of buy other companies now. Then we've done sort of six sort of acquisitions till date.
Wow.
So the entire complexion of the business changes.
Was your role at that stage essentially to bring in clients? Like you were the chief client acquisition guy?
No. I think the only smart thing I was about to say the smartest thing, but then I realized I've not done many smart things. This is the only smart thing I've done in my life, was to sort of have this command and control structure clear from day one, which is that if you run the business, you run the business. Now I'll not run the business, right? So this is not to say that I've not got on a client call or not been in the trenches with my folks in the middle of a crisis, but that is the exception. That is not the case. So the moment you cross a certain level, then folks sort of take care of it themselves, right? I mean, I don't want to say. I mean, think about it. We understand that top line is a vanity metric, but the fact of the matter is, revenue is also to some extent indicating value that's being exchanged. The client values you enough to give you 100 crores of turnover at some level. Right? Profitability is a metric of efficiency, and revenue is a metric of value.
True.
So, not a lot of companies can even hit 100, 200 crores in sort of turnover, right? So these are companies within companies. I mean, these are companies within the company, right? So, like I said, the business head takes all these calls. I don't really. Of course, if it's a key account or something like that, then
like way back in 2008-9, you had like a BFSI head who was leading sales and growing BFSI.
Very quickly after that, 2010 we had it.
Okay.
Because 2009-10 was recovery, right? You still had to sort of stabilize the ship, make sure that basically it is just cleaning up your past sins, nothing else. I can tell you the capital infusion, 80% of it went into just cleaning up your past sins. So
what does that mean? Like cleaning up past sins?
In the sense that you had debt, you had sort of credit lines, your burn had sort of burnt a hole in your P&L, right?
Right.
So you had to bring that back into shape. The company itself, if it's 90 days from shutdown, there are serious questions about it being a going concern.
Right. Yeah.
You had to set that ship right first. So 2010, 2011, we started this process. I mean, giving control to the center of the business heads. So sometimes it goes wrong. Sometimes people misunderstand the freedom to be something that to be and not to do. But then you have to course correct it. Saying, nay, this freedom is for you to do things. It is not for you to be a certain person or a personality. But luckily, at least I don't have that problem with my business heads. They treat the business like their own. They run it like their own business. They have a stake in the company. It's a model that works for us. It may not work. It may not work for other people, but it definitely works for us.
Amazing. And what percentage of the business is still with you? Like, what is your stake today?
I am the majority stakeholder. Me and my wife collectively own more than 51%.
Okay.
And we have no intent to dilute as of now. Depending on circumstances, we'll take a call on it. See, again, this is not a hard thing. This is a very interesting subject. So you have these milestones, right? Or you have this internal blocks in your mind. And I used to have this for the longest. So somehow 24% is your first block, right? saying, okay, this person becomes a majority stakeholder or stakeholder, materially significant stakeholder.
Yes.
I think the second block that founders face is 51%. It has to be 51. It can't be 49. Right. And I think the third block that they face is when they themselves don't want to be less than 24. It's like materially insignificant.
Right.
I am saying, boss, this doesn't matter. This doesn't matter. Right. If you have the right set of investors, you can hold 10% of the company and be a happy, wealthy person. If you have a wrong set of investors, they can make your life miserable by holding less than 10% of the company.
True.
So these are all artificial sort of constructs that we have built in our mind, because we believe that once the threshold has been crossed, there is some loss of control, or there is some increase of governance, which is why I go back to the earlier statement saying, look, whether you give away 1% or whether you give away 99% of your company, you have included new stakeholders. So be conscious of that.
Right.
So this is a mental thing even in my mind, to be honest. I'm very proud that I own majority stake. It doesn't mean anything. It really doesn't.
So you said you did 6 acquisitions. How did you fund these acquisitions? Did you give equity?
Internal accruals. Wow. No. We don't give equity. We don't give.
How is the staffing business valued? Like it's a multiple of EBITDA, I'm guessing, because top line, as you said, is highly rated. So
it's a vanity metric. So if you look at listed companies, European companies will be 8-10 times EBITDA, but Indians are a different story altogether. Indian companies, TVS and Quest, depending on who you pick, will be anywhere between 33 to 50 times earnings. So very Facebook type valuations.
Wow. Why is that?
We of course acquire for significantly lower fractions than that. Yeah.
Right. So these acquisitions that you did, how did what were some of your learnings around acquisitions, making acquisitions work? Like, post-merger integrations, different cultures, the egos of people, so on and so forth.
I think the first lesson that we need to learn as a nation is that, Indians generally like negotiating for negotiation's sake. वो हमारी आदत है.
True.
Whether you're negotiating for vegetables, कि भैया वो थोड़ा extra डालो, what is that, कड़ी पत्ता.
Right.
But that doesn't make it life. So I'll give you a sort of. So I bought a motorcycle, right? A high-end motorcycle, quite expensive, right? Both me and my friend bought the exact same model, exact same color, exact same everything. Both of us landed. तो मेरा थोड़ा रिश्ता था वो शोरूम मैनेजर के साथ. ₹150 का कीचेन, $150. This is the MRP. So I am telling you that the actual value of the keychain is not more than 10 or 15 rupees, right?
True.
गलती से उसने मेरे को दे दिया. This guy, short of falling on the floor and throwing a fit, did everything else. Right? The point is that Indians like negotiating. We like bargaining for the sake of bargaining. We don't realize that negotiations have to be efficient by design. And buying vegetables and getting that extra sort of kadipata is different. It gives you some cheap thrills. But you can't carry that mentality forward into buying and selling a company, right? This is a different kettle of fish altogether. So your ego, this bargaining. I think I want to split 2 words, right? Bargaining and negotiation are not the same word. If they were, then there'll be 1 word. There won't be 2 words. I think bargaining, you're trying to price the whole thing down. So the seller wants infinite value, and the buyer wants the same thing to be priced at 0. This is the essence of bargaining, right?
True.
Negotiation, I think, is getting the other person to see your point of view. So I think where negotiation should happen, we end up bargaining. Right? So we don't go after companies or egos or promoters where we sort of get into that situation. Right? Because we ourselves are small. And irrespective of it. So the first thing I've learned is negotiate, don't bargain. The second thing I've learned is, or the second insight that we as a company have, is that irrespective of the ticket size, right? Irrespective of the company, every deal will take the same amount of time and effort, right? So make sure that your ticket size are also also right? So the right mentality, sort of the right ticket size, and of course the right value. Right now, some of that value can be generated post you doing a merger, because essentially you are buying the future and the seller is selling the present. So you talked about post merger sort of integrations. We also focus on post merger value accruals. So we like sort of entrepreneurs for the reasons that we discussed. A lot of people are not able to cross this chasm of, let's say, regulatory hurdles, of working capital. So there is potential in the business, there's potential in the promoter, there's potential in the niche, the geography, whatever it is. There's some potential that we see. Can we create value together and not limit it to a transaction is sort of our approach to M&As, where we have strayed from this approach and focused on the Excel. It's always been a bad acquisition. Where we have stuck to this approach and said, look, let's be partners in this deal. We've always both parties have got value out of it. And we're not afraid to renegotiate that value. You might think that person will bring X. Let's say they bought 2X. There's no reason why post-merger negotiations cannot happen. So I think a healthy attitude is very important. This is somehow mergers and acquisitions have been put into this confrontational bucket, right? Us versus them, and ek ne becha, dusre ne kharida, very transactional, very adversarial. Good acquisitions are generally not like that, at least in our experience.
So your most successful acquisitions, typically the founder continued working with you and scaling that business as a business.
He becomes a separate P&L owner. We give him wings.
Amazing. Okay.
Because you have access to a larger brand, you have access to working capital, you have access to a network, X, Y, Z, call it what you may. Something as basic as structured HR, structured finance. It's very basic, but some people may lack even that in their lives.
And what is the reason to acquire typically? I know staffing businesses typically grow by acquisitions. Like I guess Quest has also been a very acquisitive company and reached the scale where they have, largely due to acquisitions only. So what is the reason to acquire versus do organically on your own? How does one think about that?
I think merger and acquisition is essentially very at a meta level is the gift of time, right? So can I build this? Short answer is yes, but it's going to take me time and I'm going to make mistakes, right? Now, can I expand into this geography? Short answer is yes, but it's going to take me time and I'm going to make mistakes. You're already there, right? So can you give me the gift of time, and can I give you the gift of money?
Interesting.
Is the essence of acquisition, right? The very essence of acquisition.
Okay.
And I would say we haven't done any mergers, but I would say that the same logic applies to a merger also. Yes, I can build it out given enough time, but I'll make mistakes. So why don't I just sort of buy that time from you and offer you money instead? I think that's very fair. And that's what we look at. We look at niches, or we look at geographies. Sometimes we look at portfolios that we want to get into. That will just take us time and effort. And if somebody can give us that gift, then I think money is a very small price to pay, and a partnership is a fantastic outcome out of that deal, right?
Okay, interesting. So a portfolio that you want to get into would be like, say, for example, if you want to start offering contract staffing for Salesforce developers, that would be an example of getting into a niche. Okay.
Absolutely.
And because hiring a Salesforce developer is something which you'll spend time learning, how do you identify a Salesforce developer, and because it's a niche skill, and so therefore it's better to buy some company which is already doing this, which understands and can scale it up. You can get them new business and capital and regulatory frameworks, things like that.
Absolutely. I think I couldn't have put it better myself. I think the only layer that I would add is the Salesforce developer contract staffing business big enough? Can it become a 100 crore line?
Okay.
It's also something that we pay attention to, because sometimes there might be a niche in the market, but there may not be a market in that niche. It might just be a niche business 10 years out. So we're not interested in that.
Okay. Which niches have you bought?
So IT staffing was a niche that we started, to be honest.
Okay.
Bought the business.
Okay.
right? E-commerce logistics, we bought the business.
Ah.
Uh,
Okay.
we bought. In fact, back in the day, money transfer, all these things were a big thing. I'm talking about pre-Paytm. So we bought a business that serviced, did contract stocking for money transfer folks.
This Western Union kind of companies.
Correct. Western Union, Stroke, MoneyGram, and all that.
Okay.
So we only buy niche businesses. There's no sense in buying a mainline business.
Right.
And there's no sense in buying something so small that it remains niche. And equally, there is no sense in buying something large, so large that you can't digest it. Or sometimes it kills you also. The problem with M&A, even though we are sounding I am trying to sound very smart when saying this, but the fact of the matter is most M&As go sideways.
Right. Interesting.
Acquisitions, typically, the chances of them going sideways are much higher than creating sort of value. And I can point out to sort of $1 billion areas, right? Microsoft buying Nokia. Very difficult.
Yeah. True. Yeah. Interesting. So let's wrap up the conversation with one element we've not spoken about so far, which is you as an angel investor. Tell me a bit about what made you wear the angel investor hat. What kind of pitches interest you? How do you screen and filter that whom you want to invest in? What kind of ticket size do you invest?
Yeah, so I'll go back. You remember the call center story? The call center story actually has a backstory. So in 2007, you would have figured out, Akshay, that for me, sort of everything is possible because generally I'm an optimist.
Right.
So in 2007, I said, let's build a voice search engine.
Okay.
And I built it also. So this prototype was showcased in an event called Proto.in, which was India's top 15 sort of most promising startups, right? And then, some people are not mentioned because they are much larger than I am, called me to a table and said, why don't you pitch to us? I took that moment to blow up completely in front of their faces. So in 2007, I did not know what an angel investor was. And I thought I was the only VC in town, right? Literally, So I came to Bombay. A very learned and very wise gentleman said, you come to Bombay. I think this is the city for you. Don't hang around. I think you'll vibe well. So I came to Bombay. I understood the entire investing thing. I actually got into angel investments laterally. And what I mean by this is because I blew up in a pitch, I started working with incubators and accelerators to help their startups improve their pitches. And I still do it, but I don't do it as actively as I did, let's say, 15 years ago. Okay. One thing led to another. We started India's first private incubation center called the Startup Center. I just led external support. There's another gentleman that ran it, but it ran for what it's worth.
Okay.
So I had a ringside view of how startups were built and financed, right? So it was a very natural progression. It wasn't like I woke up one morning and I said, I want to be an angel. So this was my sort of long story short. I think angels, it's very important to define where angel investors come in, right? So angel investors will sometimes come in when there is an idea or even a PPT. And they will basically give small amounts of money to help a startup figure out what to scale, right? So it's a high risk business, right? So essentially you have no data. So startups, I would highly urge you not to put this. Gartner says this will be a $25 billion business by 2030 because right. Three things. That's a syndicated report. My guess is you haven't read the report. And my guess to why you have not read the report is probably you can't afford it. So have some conviction in your own data, preferably bottom up, right? And essentially that's what angels should look for, at least I look for. I look for a strong founder who's chasing a big problem. And that's all the data there is. Now, to be honest, Akshay, there is no data at all.
Yeah, true. Right? Absolutely.
There is no data.
Angels or the pre-seed level, there is no data. True.
There is no data, right? So founders is what the bets are being laid on. Business models will change, markets will change, products will change, but the founding team will not change. So yes. Founding team, founder chemistry with you, even though you're not full-time, will I get along with this guy? Is there a hope that by mistake, if I say something intelligent, they'll listen to me? These are the things that we check, or at least I check.
It's hard to check all this over a pitch, one single pitch, right? Like
I
a
don't,
typical.
I don't, I don't ask for pitches. I will
Okay.
sit the founder down for a coffee
Mm.
or breakfast, sit and have a conversation with them for let's say an hour, and then make up my mind.
Okay.
And if I make up my mind, then I come in. Ticket sizes used to be smaller for me. I used to start with a couple of lakhs back in the day. But now, obviously, my ticket sizes have increased. So typically 25, 30 lakhs is what I put into a startup. If I have the conviction and if they have the conviction. And typically we hang around until we get thrown off the cap table by institutional.
Okay. Okay.
Hopefully we want that period to be as short as possible.
Yeah. Right.
So we don't hang around for very long. Hang around for maybe 3-4 years, which is standard practice. And we're also very greedy. So we want 30 times our investment. The reason is because if you invest in 20 startups, 18 will fail.
Right.
One will become a zombie. That's your worst startup. This thing will neither die nor live. So that 20th startup really has to hit it out of the park.
Right.
And if they give you 20 times your money, you're just about breaking even on your portfolio. So this is the reason why investors are greedy.
Right. Okay. Interesting. Do you have a favorite space like B2B or something like that, or like you're neutral?
I like B2B. I don't invest in things I don't understand.
Right.
So I don't understand B2C. It's not like I don't like it. It's just that I don't understand it. If I can't add value, why should I add capital? Is my logic. Right? So B2B I like. I think blockchain is very promising, but I don't understand it. Just like I think B2C is very promising, but I don't understand it. So I sort of play with, of course, you try to expand that space as you go along. But I've told you this is not to say that I don't invest in deep tech. So I have a few startups that are very deep tech. But yeah, B2B services, SaaS is typically something hopefully I understand and therefore I invest.
Okay, understood. So my last question to you, any advice to young founders, like a 20-year-old today who's listening to the show, wants to be a founder someday, what would you advise him?
See, generally I don't like giving advice because I'm sort of almost going to be 50 and experience counts for nothing, to be honest, in a fast moving thing like the startup world, right? What was relevant 3 years ago is not relevant now. So how can what was relevant 25 years ago possibly be of any value? I can give some first principles which have not changed in the last 25 years, and it's left to founders to sort of take them, not take them as they deem fit. I think the first principle is that it's more dangerous to not do a startup than to do a startup. And this is counterintuitive, right? You can always get back to a job. But the older you grow, the lower your risk-taking ability will be. You'll have kids, you'll have a family, you'll have some EMIs 10, 15 years down the line, and then you can't forsake all that for the freedom of creating something new. So if you're 22, 23, 24, 25, you have zero risk. And you have even lower risk. This is my submission to all the IIT, IIM folks. You have even lower risk than a tier 2, tier 3 guy. You will definitely get a job. You're not going to starve. Right? So this is the first principle, right? I think the second is that people look at least from a startup founder perspective, a lot of people look at angel investors to sort of validate what they're doing, right? Please remember, we are wrong 90% of the time. Why would you trust somebody who's wrong 90% of the time? I wouldn't trust somebody who's wrong 90%.
Right.
So angels are not here to provide validation. They are here to provide capital in case they think that you are sort of investable, right? So the only sort of cohort that you should look at validation from is actually the end customer. If they are buying, then that's the end of the story. Then nobody else has a right to give you an opinion of whether you're providing value or whether you're providing something that's valuable or not. Right? The right answer will only come from the customer. It will not come from angels. It will not come from advisors. It will not come from industry reports. Right? It will only come from the customer or the consumer, as the case might be. And I think the third part is that suddenly funding has become some kind of a must-have. right? Uh, a lot of the startups, if you look at the two biggest sort of folks in India right now, the two richest men in India right now are Ambani and Adani. How much venture capital did they raise? Who were their angel investors? You go back a little time, Birla, Tata. Do you know the name of the venture capitalists who put money into Tata?
Yeah.
There was none.
No, but
Right?
it's the gift of time. Like what you said with M&As, this is
Correct.
also
Correct.
like
Correct.
funding
So
gives
the
you.
segueing right into my answer. No, I agree with you. So capital gives you two things. It gives you velocity and it gives you permanence. Right? What do I mean by this? Velocity is the ability to prioritize in a certain direction. Right? Let's say growth over profits. Right? And permanence, as a startup, you will make a lot of mistakes. If you have money in the bank, then you're saved from those mistakes.
You can survive the mistakes.
You can
Right.
survive.
Interesting.
I'm not dissing capital. I'm not dissing it for one moment. But I'm saying something else altogether. I am saying not being fundable, it does not automatically equate to not being viable. Right? So it is a
Yes.
gift.
Fair point. Absolutely.
But please remember that the gift is not for everybody. Less than 1% of startups actually get funded, and less than sort of 10% of startups that get funded actually survive. So don't force yourself into that category and then decide if I don't get funded, then I'm a failure of some kind. I think these are the sort of just the 2, 3 first principles that I want every startup founder or even any small business founder to sort of live their life by.